What if I told you that the biggest risk with the recent regional bank crises in the United States of America, for example, Silicon Valley Bank shutting down 2023 and the new problems we had during the autumn of 2025, is not the money lost at these specific moments. It's the trust that is lost forever going forward, and the type of impact that will have on the spirit and the American dream. So basically, the difference between a regional bank and a bigger national bank, for example, JP Morgan or Morgan Stanley, is the way they operate and how they make money and the margins they have when they earn money. A regional bank has to know the customers better, soft values like understanding that this person at the moment might not have the cash, but we believe in the company long term, and therefore we can lend that person money. That is the type of deals you have at a lot of regional banks. They know families, they trust people building businesses from the ground up. Maybe some of the persons do not have the best credit line at the moment, but long term they have the type of relationship with the bank that they can build their small businesses and get a loan despite maybe not having at the moment the best outlook. That is what have fueled the American dream long term as small businesses around the United States of America. We have 4,600 regional banks in USA. That's a unique proposition, and I think being an entrepreneur in USA is something very special. And they are the best in the world is building small businesses and get them going very fast and provide liquidity for these businesses. And what I've heard from many investors and people like Kevin O'Leary, for example, now is that it's good that regional banks are getting shut down or getting eaten by bigger banks because the competence is not there. But what I want to talk about today is the reason why these regional banks are failing, especially going through the example of 2023 and the Silicon Valley Bank. Why did they fail? Were it really incompetence, like many people say, or was it something else behind? And also the type of implication that will have long term. So let's start there. During the pandemic 2020, the rates were very low, and it was a lot of strain on the financial system. So basically, what the Federal Reserve and the government of the USA wanted was to provide a lot of liquidity, and banks responded as they should do to have a lot of long-term corporate bonds, etc., so they could earn money. Basically, a bank, they can't just park money in cash. They will park their money in, for example, treasury yields or corporate bonds if they not loan out the money and earn interest. So this is what they are doing. And for example, Silicon Valley Bank had a lot of these type of loans for 7 to 8 years, and nothing strange going on there. Everything was good. After the good years in the stock market, 2020, 2021, we did start to see a slowdown during 2022. And going forward, the liquidity started to dry up for a lot of companies. And what also hit the market now through a macro perspective was higher interest rates. And it was the Federal Reserve in USA pushing their interest rates higher, but it was the same around the globe because the system was so flooded with money printed because governments and national banks were very scared during the pandemic that the financial system might shut down completely, and this was sort of a failure from them. They printed too much money and flooded the system too much, and the hangover of that was that we did get a lot of inflation. And that inflation hit very hard. So the Federal Reserve in USA, we take the US perspective now because I'm using the example of the Silicon Valley Bank here to frame the regional bank crisis. So the Federal Reserve increased their interest rate much faster than they usually do, and this affected all regional banks, all banks, but especially small banks, a lot harder than they expected. So, for example, Silicon Valley Bank, they had a lot of bonds, corporate bonds, in something called HTM in accounting language, that is hold to maturity. So that means that in accounting, when you buy something and put it in HTM, supposedly you are going to hold that bond for the whole period. For example, if you buy that bond you for 8 years, then you will hold that bond for 8 years until it's mature, and you will earn interest rates on that bond. So when you buy it, maybe the interest rate on it is 1.7%, and you will make money instead of wasting the money just holding in cash. Banks are not there just to hold cash, they are always there to make money. If they do not do that, they won't have any margins, and they lose their right to existence. So Silicon Valley Bank was quite aggressive in terms of having corporate bonds here because they wanted to please their shareholders and have a growing net income. So a lot of banks do this. The problem now with the corporate bonds in HTM, hold to maturity, was that when the interest rate got higher, the worth of the bonds they had in the HTM were getting struck quite hard, so they were lower. So if they had to sell the bonds, then they will mark a big loss in their balance sheet and in their income statement. But as long as they don't have to sell any bonds in their that they have in the accounting in held to maturity, then there's no problem. But they also had bonds in what's called available for sale, AFS. And when liquidity started to dry up during 2022 and 2023, Silicon Valley Bank had a lot of customers in Silicon Valley, obviously tech startups, tech companies, etc., that did not have that type of cash flow to sustain higher interest rates. So they needed more money. So they started to take out money from the bank, and a liquidity crisis started to hit Silicon Valley Bank. So they did not have that much money, because a bank make money through taking in money and then lend the money to 10x. So for example, they might take money from one customer and then they 10x that through loaning out that money to 10 other customers. But when the liquidity crisis started to hit the Silicon Valley, they wanted to firstly have more money from Silicon Valley Bank for their businesses. And secondly, when they did this, the money supply wasn't enough for Silicon Valley Bank, so they had to sell some of their bonds, and they sold them from what's called AFS, available for sale bonds. So good, so far so good. But when they did this, what hit them was that they sold them to a loss, a big loss, because the difference in interest rate was so high from when they accumulated the bonds. And this meant that the market priced in what they had left in the HTM, hold to maturity, meaning that when all this was said and done, um, people who had money in Silicon Valley Bank, SVB, started to panic, because they did see if all the bonds that they have get repriced at this moment, the bank will collapse and failure. So, for example, if if enough people start to remove the money from the bank, they need to start sell every bonds. And if they do, the loss will be so big that they will actually not survive. And when the word or the psychology started to pressure Silicon Valley Bank, more and more people started to think, I need to get my money out. And here there were a lot of entrepreneurs. They sort of understand what was going on. And a bank is not built for so many people at the same time removing the money from the bank. So they, despite being in a crisis that they could have survived, they couldn't survive it because it was too many people that put pressure on them at the wrong time. So this is how a bank failure can happen for a regional bank. So this is not the same type of failure like the failure of Lehman Brothers back in the days during 2008, because they failed because of a lot of bad loans, etc., subprime loans or mortgage-backed securities that was just not sustainable. So that was one type of failure, and this was another type of failure. So what I want you to understand here, that there are different type of failures for the banks and different type of pressures on a regional bank and maybe on a bigger bank, and you need to address and understand these type of situations where when you put your money in different type of banks. So this what was happened, and and eventually this will affect the trust that people have for regional banks. So I actually asked an entrepreneur in Silicon Valley called Tom Bilyeu. He sold Quest Nutrition for $1 billion. He had money in Silicon Valley Bank, and he told me that the trust for him, his trust for these type of banks, is now gone. He will have his money in bigger banks from this moment on, and I think this is a risk that a lot of these type of banks will face going forward. The curtains has been blown up, and now the banks need to think in another way to make money for shareholders, and this will affect how they work and how they are perceived long term in the whole of America. And this is getting me to the next step of my thesis here, and why I think this can be disturbing for. So even if you are insured to approximately $250,000, that is not an extreme amount of money, especially if the bank are going under. So I can understand why a lot of people are withdrawing the money if they feel like this bank might not survive. And when that happens, usually that can be the end for the bank. In the case of Silicon Valley Bank, the state just went in there and guaranteed money for people, but in the future that won't be the case. More and more people are stating that banks need to stand their ground and being able to sustain ups and downs, and that is what's required for it to be a company that can thrive long term. So we can't be sure that the banks forever will be bailed out. So as an investor, as someone with a small business, we need to understand what type of banks we have our money in, our pensions, our small businesses, etc. So that's something I want to give you if you watch this and are someone who owns a small business or similar. You need to understand where you have your money, watch the balance sheet of the bank, follow the income statement, just do some due diligence if you have a lot of money, just to be certain and have that peace of mind at night. Anyway, I think the situation here with regional banks getting consolidated into bigger banks is a quiet transformation in the United States of America. For me, the USA is a unique place where entrepreneurship really flourish. You can start 1, 2, 3, 4, 5, 6 businesses and fail, and then the 7 business just get really successful, and people are getting hurrayed for that. And I think that's something amazing, because that is what gives oxygen for a society, especially if you don't have too many or too high taxes. Then you really need the small businesses to thrive and the middle class to thrive. But if these type of companies or persons can't get loans, can't get that startup money for their ideas, their businesses, if they are not being able to fail and test their ideas, obviously we won't have as many successful small businesses, and the middle class can't thrive as they have done. So I think that what made maybe USA unique, because everyone agrees that the system of 4,600 regional banks is unique for United States. A lot of other big countries in the Western world has very few banks. For example, where I live in Sweden, we just have like 4 or 5 very big banks that have basically a monopoly on lending, etc. So sure, the lending is decent in terms of how the interest rates, etc., are, but they are having very automated systems when they loan out to people. So if you sort of have a criminal record that is now gone, or maybe you have credit issues, or 4 years ago you forgot to pay that phone bill, then you won't get the loan from the usual banks. And the alternatives to that is banks that are very, very expensive in terms of interest rates. So I think that can be a problem in USA, and the problem in USA will be much bigger because such a big part of that society in built on the trust and the entrepreneurship. And if they can't get access to money easily, to liquidity, then we won't have the same type of unique opportunities and the American dream that we have always had. And I don't see a lot of people talking about that impact yet. But if regional banks really start to consolidate and that pace accelerate going into future, I think this might be a big problem and something that they have or need to address, because I don't think the marketplace would solve this on their own, because I've seen what big banks and monopoly in this area are doing in other countries, and it's not flooding great opportunities to people that are starting businesses for the first time. The people that are getting it easy in the future is people like Kevin O'Leary, for example, the one in Shark Tank. He said that it's a really good thing that regional banks are getting shut down, that we'll have fewer banks like in other countries. It should be the same in USA, because as an investor, from his perspective, he's an sort of having a big company and wants to invest in different companies. He wants to have his money, or the companies that he invests in, he wants them to have their money in bigger banks, because then he knows that there are no credit risk at line. Why should he invest in a company that has their money in a bank, for example, that do not have control over their balance sheet or their liquidity? So I can understand that the big guy wants this consolidation, but the smaller guy, the small businesses, the car washer, the asset light, someone who just start an asset light for businesses, etc. They just need that loan, and they don't want the interest rate to be too big, because it's not easy to compete out there. And if you just can get a loan, and that loan has so much interest rate, that will eat on your margins very fast. So basically, the people who will get to start businesses is the ones with the connections, the ones with money, or the ones with, for example, a lot of money in the family. So getting the new entrepreneur in, the one that has really built and created USA and made it the richest country in the world, that type of people and ideas might be shut down in the future, and this might shape USA to be more similar to other countries. And I don't think that's good for the world. I think we need countries that are uniquely good at different types of things, and for the world's sake, we need USA to still be a country of entrepreneurship, to push the boundaries and to flood the system with new ideas and a lot of uh, great opportunities and companies that provide amazing services for the world. Thank you for tuning in. If you're still watching, you have seen the whole video. Don't forget to drop a like and subscribe to support the channel going forward. I'm so blessed to have you all out there. Bye.